This weekend, Washington and Tokyo did something they haven't done together since 2011. The yen had collapsed to a 40-year low, over 163 to the dollar. Trump and Japan's finance minister confirmed it. The US and Japan jointly bought yen together to stop the slide. And the reason they had to act tells you more than the intervention itself. Before last week, the dollar was above 163 yen, a 40-year high, the worst the yen has been since before most of you were born. Suspected intervention pushed it below 160. Then Monday, the official confirmation, both governments together selling dollars to buy yen. It dropped over a percent in hours, down to the mid-150s, briefly touching 155.35. Trump's own words on why. They have a weakening yen, and they wanted a little bit of help. We're always there for Japan. Here's what actually matters now. 155. That's not just where the yen landed, it's the test everyone's watching. Strategists say holding below 155 is the real signal this rally has staying power. ING's read, the intervention can cap the pair near 160, but pushing it durably under 155 needs something more than yen buying, softer US data, lower Treasury yields, or a more hawkish BOJ. In other words, intervention buys time. It doesn't fix the reason the yen was collapsing in the first place. And this is where it connects to everything I've been tracking. The reason the yen was collapsing is the same reason the 30-year won't come down, the rate gap. The Fed near 4%, the BOJ still near zero, that's the carry trade, and it's been building for a year. This intervention treats the symptom. It doesn't touch the cause. One analyst put it sharply. This could actually weaken confidence if Washington is quietly protecting Japan from having to dump treasuries to fund its own defense of the yen. Read that again. The US may be intervening to stop Japan from selling the debt that funds our deficit. That's not a currency story anymore. That's the bond market protecting itself. What I'm watching now, does 155 hold, or does the pair grind back toward 160 once verbal support fades? 5 straight days of US jobs data land this week. A central bank that just stopped giving forward guidance, tested immediately by the numbers. And Tokyo's already said it. They won't hesitate to act again. This isn't over. The first joint intervention in 15 years isn't a footnote. It's an admission that the imbalance got too big to leave alone. Whether it holds is the next test. I'll be tracking 155 same as I've been tracking 5 on the 30-year. Same trade, different currency.